and over to you.
Yeah, thank you, Shashri, and good morning, everyone. On behalf of Incred Equities, I welcome all to Aditya Birla Sunlife PMC 4Q and full year FY2024 earnings conference call. Along with us, we have Mr. A. Bala Subramanian, Managing Director and CEO, Mr. Parag Joglekar, Chief Financial Officer, and Mr. Prakash Vogle, Head Investor Relations. We are thankful to the management for allowing us this opportunity. I would now like to hand it over to Mr. A. Bala Subramanian, Managing Director and CEO of Aditya Birla Sunlife PMC, for his opening remarks. Over to you, sir.
Yeah. Thank you, Jignesh, and good morning to everyone. I hope you all had the opportunity to go through the earnings presentation, which is available on the stock exchange as well as on our website. Before highlighting the broad economic outlook and providing an update on the mutual fund industry and the ABSL AMC performance for the quarter ending March 2024, I'm happy to share that Aditya Birla Sunlife Mutual Fund, being one of the oldest private sector mutual funds in the country, established in 1994, is getting towards the completion of 3 decades of its presence as one of the pioneers in the Indian mutual fund industry. We feel proud to serve the growing needs of investors in the country and also contribute to the larger success of the mutual fund industry as one of the highly committed, well-governed mutual fund players. On the 30th year of our operation, we have set aside our growth path to achieve new milestones in respect of all our business verticals and make this year as one of our memorable year for our employees, investors, stakeholders, and shareholders. Let me now begin with the economic outlook and mutual industry update. We are in a dynamic global landscape with elections happening in numerous nations and territories, collectively representing over half of the world population. The global macro picture in the early 2024 presents a cautiously optimistic outlook with underlying dynamics influencing growth on one side and interest rates on the other side. We believe India will continue to remain in a bright spot with strong government funding in building infrastructure, increased investment coming from the private sector, ably supported by high domestic consumption. As is known, the Indian economy continues to exhibit resilience with a healthy projected growth rate in excess of 7% in FY25, supported by stable inflation, interest rates, currency, and rising forex reserves. Indian equity market has consistently outperformed global counterparts, reflecting the strong fundamentals of the Indian economy and the earning potential of the companies across sectors. One should not be concerned with the recent market volatility, which largely stem from the regulatory and mutual fund industry initiatives on smaller mid-cap segment disclosure, which are aimed at enabling investors to make informed decisions. India's strong structural drivers and economic fundamentals remain intact, encouraging investors to continue participating in its growth potential. We also believe that widespread growth will continue to be the driver of our market sentiment. With respect to the mutual fund industry, as of 31st of March 2024, the quarterly average AUM reached 51.11 lakh crore, growing with 34% on a year-on-year basis as compared to 40.49 lakh crore as of 31st March 2023. During the quarter, the mutual fund industry witnessed equal net sales of around 1,600,000 crore through new funds offering as well as an existing fund. The total NFO collection was around 18,900 crore, and the balance funds flows have come into the existing equity schemes as well as hybrid funds, sectoral thematic, arbitrage and multi-asset allocation funds. The industry SIP flows grew by 35% year-on-year from 14,276 crore in March 2023 to 19,271 crore in March 2024. The total number of mutual fund folios stood at around 18 crore with an increase of 22% year-on-year, with the unique customer base around 4.5 crore. The individual average AUM grew by 43% year-on-year from 23.27 lakh crore to 33.31 lakh crore and contributed 61% of the total AUM. These 30 cities with an average AUM of 9.83 lakh crore accounted for 18% of the total AUM. Moving on to ABSL AMC performance, turning on our strong foundational pillars, our focus has been to strengthen our main levers of growth in the organization by bringing in the right talent and making strategic changes in certain leadership roles. In fact, our momentum in the last quarter is on the back of uptick in equity performance coupled with a well-established fixed income practicing, a robust sales engine, close to the ground connection, tech-enabled services and a growing digital business network. Building on this synergy and energy, the business is on a meaningful momentum and our team is geared to make the most of it. This has been witnessed during our annual investment conclave, which we call it the Voyage, attended by over 2,000 partners in Mumbai in the month of February 2024. In Q4 FY24, our overall average assets under management, encompassing alternate assets, reached 3.46 lakh crore size, reflecting a 13% year-on-year growth. Notably, our mutual fund quarterly average AUM reached 3.32 lakh crore, with equity quarterly average AUM standing at 1.52 lakh crore. I'm happy to say that our SIP numbers during the quarter has witnessed good uptick, moving from 1,005 crores in the month of December 2023 to 1,250 crores in March 2024, making a 28% quarter-on-quarter increase. We have added around 6 lakh new SIPs, which is approximately 2.5 times increase compared to the previous quarter. As part of our endeavor to acquire new customers, we have added approximately 11.5 lakh folios during the year. Of these, around 7 lakh folios were added in Q4 FY24, bringing our total serviced folios to around 86 lakhs. Individual investors with an average AUM of 17.3 lakh crore now constitute 52% of our assets. Additionally, the contribution from these cities stands at 17.5% as of March 2024. We have seen good momentum build up in our sales numbers, reflected in our healthy retail growth. The impact of building a robust sales support ecosystem that consists of virtual relationship managers, Sampark for onboarding distributors, direct channel to service HNIs and family offices, digital distribution, and service sales is coming to its full potential gradually. Our enhanced engagement at the relationship manager level, increased satisfaction with the service effectiveness, positive sentiment towards the fund performance, and an improved digital transaction journey have all led to positive sentiment and an improvement in the overall AUM momentum. I am also happy to share that our MFD NPS score, Net Promoter Score, around performance, sales engagement have improved significantly during the quarter from number 3 to number 28 as of Q4 2024. On the alternate business front, to meet the growing needs of HNIs and family offices, we have strengthened our team to enhance our PMS and AIF offerings, both in equity and fixed income. We currently offer over 13 products in PMS and AIF. Our good investment performance experience across our current offerings in PMS helped us in getting our products being sold in some of the organized channels through the launch of ABSL India Special Opportunity Fund, which is a category 3 AIF, where we are seeing traction coming from the HNI investors. In order to further expand our AIF product offerings, we have brought in a senior investment professional who offers fixed income credit related AIF to cater to both institutional and HNI customers. We believe both equity and fixed income AIF product offerings will further strengthen our alternate business vertical business plan. Our GIFT City operation has gained momentum with the launch of a few products to invest in the overseas markets under the LRS scheme. We have launched the industry first ABSL Global Emerging Equity Fund. We strategically fit into Arga Emerging Markets Equity Fund, enabling our investors access and benefit from emerging market opportunities. We are now in the process of launching a category 8 AIF feeder fund in GIFT City, which will fit into the ABSL AMC mutual fund schemes in India. At the passive front, as in March 2024, our passive assets stand at around 28,900 crores and have built a strong customer base of around 6.85 lakh folios. To drive our passive business to the next level of growth, we have finalized a senior investment professional with extensive international experience to manage our passive business growth, and he will be onboarded very soon. Moving on to the financials, we at ABSL AMC are happy to inform that we have achieved our highest ever profitability in FY 2024. Profit before tax is at 1,008 crores, up 27% year-on-year, and profit after tax is at 780 crores, up 31% year-on-year. For FY24, our total revenue is at 1,614 crores, up 21% year-on-year. In Q4 FY24, total revenue is 440 crores, up 31% year-on-year. Q4 FY24, profit before tax is at 268 crores, up 48% year-on-year, and profit after tax is at 208 crores, up 50% year-on-year. We are pleased to announce that the board has proposed dividend of rupees 13.5 per share for FY2024. So with this, I would like to conclude and open the floor for any questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Swarnabh Mukherjee from B&K Securities. Please go ahead.
Thank you, sir, for the opportunity and congrats on a good set of numbers. 3 questions from my side. First, on the top line yields that we have recorded, so there is a sequential expansion. I wanted to understand the levers for the same. Is it product mix or anything else that we can read into it from that expansion? And simultaneously, if you can possibly give some cuts on how are the yields in the specific product segments and maybe flow versus stock, how the numbers are panning out. So that would be the first question. Second is, I think the monthly SIP flow that has kind of seen a good jump in this quarter. Wanted to understand how, in which schemes you are seeing the incremental flows, and if you could also give some color on what kind of distributors these incremental flows are coming from. And thirdly, on the cost structure, so this quarter vis-a-vis last quarter, there was an increase in both employee expenses and other expenses. So if you can guide us, how should we look at this number panning out in the next year, and any one-offs in this? That would be
sure. I'll just ask Parag to take the first and the third question.
Yeah, sure. Thanks for that, Prabha. So on the revenue side, the increase in the revenue is in line to a greater extent with the AUM growth which we have achieved, and the mix of overall equity AUM and debt AUM. So that has resulted in growth. Plus the growth is also on the total revenue has been higher with the increase in the overall other income also. So those are the main reason on the revenue side. The other thing on the yield which you have asked, yield on the equity is in the range of around 68 basis, and on the debt is in the range of around 23 to 25 basis. Liquid is more or less around 12 to 13 basis. So that is on the yield side. On the expense side, people cost has slightly increased, mainly due to some true up on the VPay or the bonus, which has resulted in slight increase on the VPay side. On other expenses, the main increase is generally in the last quarter, you will see some uptick in the other expenses in most of the last quarter of my earlier years also. And the event which we conducted, voyage, was one of in the other expenses which happened in the last quarter. So those are the main reason for the uptick in expenses.
Yeah, understood, sir. So, sorry, sir, if I could just follow up on these couple of responses, sir. So other expenses next year, how should we build this? And I guess voyage would be an annual event. So should we then also factor in that it will again come in the similar cost will come in the fourth quarter next year?
Yes. Okay. So the voyage will be annual and it will come most probably will do in the similar quarter next year. I don't know what will be the format, but if it comes in the same format, there will be a cost in mostly in last quarter slightly jump up.
Okay, and the cost inflation between this year and next year, should we kind of build in a similar run rate as we have seen in FY24?
Yes, on people side, it will be more of a inflation plus maybe some of the recruitment which we do on the sales side or the passive which we are, or alternate side which we are trying to build. And there may be, but mostly it will be inflation plus something, a couple of the percentage up. Yeah.
Okay, understood. Thank you.
Thank you.
Bala, sir, if you...
I'm sorry. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. The next question is from the line of Lalit Dev from Equirus Securities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity.
Mr. Dev, can you please use your handset mode? Your audio is not very clear.
Yeah, hello.
Yes, please go ahead.
Yes, so sir, I have two questions. So firstly, like on the SIP side, like we have done the material well during the quarter. So could you give us a sense like in which of the schemes we are seeing higher flows, and also could you comment on the channel side, like from where we are seeing higher flows?
Lalit, just can you repeat the first question? What did you ask the first one? I couldn't hear it properly.
Your voice is a little feeble, Lalit.
Yes, sir. I was asking on the SIP flows. So we are seeing some material improvement in this during the quarter in the flow side. So just wanted to understand like in which of the schemes we are seeing higher flows, and also could you comment on the channel-wise flows in the SIP side?
Yeah, sure. So the uptick that we have seen in the quarter is one, the renewed focus that we brought in to build SIPs, given the fact our performance improvement that we have seen across most of our schemes, that gave the aggression to build SIPs in the last quarter. Second, the increased flows have come through a mix of products such as FlexiCap Fund, Pure Value Fund, Digital India Fund, PSC Equity Fund, Small and Mid Cap Fund, and also the Mid Cap Fund. These are the schemes in which largely we have seen flows coming into the SIP segment through the mix of both the online platform as well as on the IFA channel. I think IFA channels, MFP channels, we have seen a significant improvement over the previous quarter, with the monthly registration going to roughly about 2,20,000 kind of numbers, which used to score somewhere around 75 to 80,000 for quite some time. So that we are seeing is now increased about 2,20,000, 2,30,000 the range. In that, roughly about 45 to 50% have come through the online channel platforms, and rest has come from the distribution channels, which is our traditional distribution channel. And within that, dominant portion came from the MFD channels.
Sure. And so like last quarter we highlighted that there were some redemption pressures in some of the core equity schemes. So like how has that trend been in those particular schemes?
Yeah, I think one of the things that I have seen is, I think gradually the redemptions used to be a little higher for us in the beginning of the year. There has been coming down in some of the schemes, which of course saw outflows because of the category generally not in much inflows. Second, performance issues are also there. With the narrowing of performance vis-a-vis the peer group, and we also seen a reduction in the redemptions pressures in most of our schemes, and improved performance in some of the categories where the flows have been coming in. It also compensates for that as well. I think we are seeing both. I think reduction in the redemptions and increased flows coming in few of our schemes. That's I think getting netted off.
Sure, sir. And so just last one data question. Like, could you give us the SIP AUM at the end of the March month?
Sure. Okay.
It is around 69,168 crores.
Sure, sir. Thank you, sir.
Thank you. A reminder to participants to press star and 1 to ask a question. The next question is from the line of Dipanjan Ghosh from Citi. Please go ahead.
Hi, good morning, sir. First of the dedicating questions, if you can give your ESOP expense for the year, and how do you forecast it for the, let's say, FY25, FY26? Second, your employee count as of March 31st. And the third will be, you have given your SIP flows for the month of March. Will be great if you can kind of give it for the past 2-3 months also will give us some color of the traction and the pace of traction we are seeing in the channel. And lastly, in terms of the product pipeline, how does it stack up for the next few quarters?
The ESOP side, the expenses is in the range of around 23 or 24 odd crore.
This will be for FY24, right?
Yes.
And how should we think of it for the next year?
Headcount is around 1,449. Headcount is in the range of around 1,400 plus 1,450.
1,450, right?
Sure. So otherwise on the SIP flow for the last 1 or 2 or maybe 3 months.
Yeah. And the SAP flows, Dipanjan, while the number for the full quarter is close to about 6 lakh registration, the monthly run rate somewhere around 2.2 roughly, 1.952, that's roughly is right. I think we are seeing each month the number is showing an improvement. Each month the number is showing improvement. Even though I'm not, even month of April too, we are saying the trend is continuing. I think the earlier the focus used to be somewhere around 2 to 3 lakh kind of number that we used to target, which is now falling in place the last quarter, and that momentum continues.
So the thing that I'm trying to understand is here, if I look at your March SIP market share, that's around 6.5% on a slow basis compared to around 5.7% in December 23. So, if you can give some color on this movement between 5.7 to 6.5 broken up for Jan-Feb, or in case if you don't have the data, if you can at least shed some color on how April is shaping up. Will it be like higher than 6.5, or we should expect a stable or lower range in just terms of the slow market share on the SIP side?
Yeah. The way we approach SAP is, given the fact that this is agnostic to the performance and is also something goes very well in terms of adding new customer base, as well as on goal-based investing. The idea is always to have somewhere in the range of about 8 to 9% kind of market share. That's why we gun for it. In fact, the peak, though it's true, it was near 2019, 2020. We used to have almost about 13 to 14% kind of market share in SAPs. So that's a little bit higher number to expect right now. I think going by the renewed sales focus that is being pushed and also being agnostic to the market fluctuation, will definitely continue to work towards making these numbers better each month. That's the whole endeavor.
Right. So if you can give some color on the product pipeline going into the next 2 to 3 quarters on the equity side.
So in terms of pipeline of product, we have a corn fund. We already have an approval and plan to launch it post-election. We could have launched it in the current quarter, the beginning itself. Given generally the vacation month in the month of May, and plus election also is there, I think we'll launch it before 30th June if possible. That's one product we have, and it's going to be managed by co-head equity, co-CIO and head of equity Harish Krishnan, along with one support person internally. And we're also looking at filing one product which is of course under the drawing board, and hopefully we will get that as well, but more in the thematic category. On the AF and PMS side, we are seeing somewhat of increased traction, given the fact that our performance has been pretty good in the PMS side, and that is being noticed compared to the other peer group in the same segment. We're also seeing onboarding of our PMS products and some of the alternate channels. Are also, I think, to see some kind of increased flows on the PMS side.
Sorry. If I can just squeeze one more question on this particular point. You have previously also highlighted at the start of the year or the last year also that you expect your alternates and PMS business to become a meaningful portion of your revenues maybe 3-4 years out. And probably today you are laying the ground stone for that. So in terms of that, I mean, in terms of the investments on the alternates and PMS space, what should one expect that to be, kind of elevated looking for a medium to long term, and maybe in that sense, your employee additions or your employee headcount additions or your new fund launch related expenses can kind of be a little high, at least for the next, let's say, 12 to 18 months?
Yeah. On the AIF side, our focus has always been to leverage the existing sales force and relationships that we have built over a period of time as a franchisee to build our alternate business. While that strategy continues, each of the sales teams have got separate targets to drive the PMS and